What is going on, you guys, and welcome back to another video. Today we have a video by request, actually. The comment here that is from Brandon B, who I'm curious what the last name is there, Brandon B.
Yeah.
It wasn't for me. I'm not commenting on our own videos, but they said, hey, Brandon and Mark, great video. Can you do a video on your top 5 to 10 stock picks to buy now and hold for the long term? I think the subscribers, including me, would really like that. I also like Mark's new news, I watch him live. We just finished a live stream literally prior to this. So if you're watching this video, every Friday, Mark and I are doing these live streams, and they're pretty fun. We just hang out and chill. And what were we talking about today? The Zuckerberg fight.
Talking about the cage match.
The cage
talking
match.
about
the
price of housing. All kinds of fun stuff. Yeah.
Cultural stuff. So yeah, that was a ton of fun, and we'll be doing that every single Friday if you guys are free for that. And the recording is also on the channel as well. But anywho, yeah, why don't we do that? We've each prepared 3 stocks today, and maybe we can bounce back and forth if you'd like that.
Yeah, it's probably best. Yeah.
Yeah, just so we're not talking for too long. But these are three stocks. What is the premise of this video?
Well, the way I took it, and I know a year or more ago we did a video, I think it was like stocks to hold for a lifetime or something along those lines. And the premise was, if you had to go and buy a stock today that you couldn't sell, you know, what would you look for? What are examples of companies would you buy? Now,
different than our stock battles, because stock battle is 1 year time frame. So we're thinking kind of what is maybe a shorter term one. This is the opposite of that.
Great point. And when I looked through, you know, it's hard because I'm kind of reminded going through an exercise like this, Brandon, how many great companies there are that I would like to own for the rest of my life. But what I didn't place an emphasis on here is the valuations today. Whereas on the stock battles, I mean, I put a high emphasis because we have a 1 year window. But I looked more at this. In fact, I threw that out the window, and I just said, even if you bought a company at a valuation today, you know, if you hold it for 10, 20, or 30 years, you know, I wasn't even factoring that in. I don't know if you sort of went to that level as well.
Similar. I put some thought to it and whether it's attractive or not, but I do lean more on your side. These are stocks that I would have on the watch list, on the radar, and not necessarily meaning that they are the best value today, but stocks that I would be more than comfortable owning for the rest of my life, in all honesty. And
probably a good way to phrase it would be stocks that you would buy and hold for the rest of your life, and the purchase window would be within the next 3 years. So you maybe find a more attractive valuation than it is today. But yeah, I mean, we're looking for things like, what I looked for was companies that have a track record of being sustainable through basically any market conditions. So I said, hey, you need to have been through recessions before, you need to have been through market crashes, and you've come through them. I looked at industries that have strong demand and that are going to continue, in my opinion, to have strong demand, because a great company today can become not such a great company if demand stops. Yeah.
And last thing, where our world will be in 10 years from now, hey?
Who knows? I looked also, lastly, Brandon, at just sort of like, if this was a set it and forget it. Like, I want to buy it, and they're going to put it away and never look at it. I don't have to manage it. That's the kind of, those are the criteria I was looking at.
Same here. Well, hey, I'll let you dive onto your first stock, but before we do, a quick announcement. If you guys are in the Calgary area, less than a month away, we are coming to Calgary with the Blossom Investor Social, and that is on July 17th. We've secured the Craft location, so tickets are available. They're already selling out. Once it sells out, we can only cap so many people in there. I think it's about 80 to 100 people venue. So yeah, tickets are live, and what I'll do is link those down below. So anybody in the Calgary area would love to meet you guys, subscribers, fans, students. We just hosted an event in Vancouver, which was just epic, honestly. And I know a lot of you guys say, oh, well, what about Toronto and Montreal? We can't go to every city, but in August, we are coming as well to Toronto and Montreal. And we've got those dates all set. So even if you aren't from Calgary, I'll link below this video the links to go grab your tickets. It would be super cool to meet you guys, and I would say lock those in. The venue is not decided yet for the August one, because we'll still got a bit of time. But Calgary's less than a month away, so with that aside, grab your tickets, and why don't we dive into stock number 1 for today, Dad?
It would be so cool to see everybody there.
Now, before we move on,
Are you a Canadian watching this video that wants to learn the ins and outs of DIY investing? If so, I'd highly encourage you to check out the Investing Academy. The Investing Academy is our program where we've worked with thousands of Canadians across the country, in many cases starting from complete scratch, meaning I've never actually invested before. Maybe I've had mutual funds and I don't want to pay any more high fees. Maybe I am investing, but I'm just not entirely confident in my portfolio. We can walk you through step by step the entire way, teach you our process from the foundation, the fundamentals, the terminology, investment strategy, researching stocks, the whole 9 yards. We'll be there to guide and support you the entire way. And of course, you get to learn in a fun community-like environment where you can attend our webinars, you can watch our variety of programs, you can interact and mingle with all sorts of other Canadians who are looking to take control and get in charge of their investments. If that sounds like you and you are in the market for online training to fast track your learning journey, take a moment and click the link down below and schedule a call with our team. They'd be happy to speak with you. Now back to the video.
Okay, so with this extremely difficult challenge to narrow it down for this video purposes to 3 companies that I would feel comfortable buying today and holding for the long term, I'm going to start off alphabetically, and I'm just going to go with Amazon. And full disclosure, I do own Amazon. I owned Amazon way back in the day, and I sold it way too early before I ended up repurchasing. But maybe that sort of is a testament to why I'm feeling this way. But I'm looking for a company that is dominant in their space. And when you look at e-commerce, that's what you think of. You think of Amazon. Also in the growing and always will be here category, the cloud. Amazon has got strong competition out there, but it is a leader in its space. Another characteristic about Amazon, and you and I've talked about this a lot, Brandon, that I really like, is it invests aggressively in its long-term investments. And for years and years, one of the issues I had years ago was this is way overvalued if you looked at it from like a traditional PE ratio, because the earnings weren't there, but the money was going and plowed back into building the future of the company. Today, where they sit with this, the way they've been established, is they have the ability basically to invest almost any amount that you could reasonably be expected to invest in future projects. And I'm just looking here, for example, like AWS, we're going to talk a little bit more about that in a moment here. But in 2022, so the last fiscal year, their capital expenditures into that segment of their business, 35% of their revenue went back into infrastructure. So, I mean, that again is another example of the commitment that a company like Amazon has to growing that. Another company that I feel in this wave of artificial intelligence field, Amazon definitely would be a company that would capitalize on that. Quick proviso, I'm not jumping onto the AI hype that this is the greatest thing ever and everything you buy that touches AI is going to do well, because it does. Well, go ahead.
I think the difference there is, they are integrating AI into what they do to enhance it. There are a lot of companies that are just jumping on the bandwagon, and then, for example, they may not even have a functional business underlying, and they're just jumping on the hype trade. What you're saying is Amazon has, an exceptional business across the board. They're established, and the AI will enhance that. That's kind of probably what you're getting at.
That's exactly what I'm getting at. And to your point, it reminds me a lot of 1999, 2000, when anything that said .com was, people were piling money into it. The strong companies did make it through that tough time. So yeah, it's a very good point here. Huge customer base. That's one thing that Amazon. People use it a lot, but when I'm saying that, I'm talking about the AWS segment in general. And you're looking at, I just look at, it doesn't matter, seem to be whatever channel I watch on TV, Amazon runs a lot of ads, and they flick through the companies that are using their services, and there's a lot of them. So I realize we're kind of on a limited time here. I can't talk forever. I probably could, but the world continues. Point. Yeah, my one of the points I had here, the world is moving towards cloud, where that's not going to change. But on the most recent Amazon earnings call, they said 90 to 95% of global IT spend is still on premises. So talk about a market that is waiting for them out there. To capitalize on that, they have the scale, obviously, to compete with Azure, Google Cloud. I think Alibaba has a cloud service as well, which is kind of fourth place there. But the big ones, AWS is leader. Then you got Azure, you got Google Cloud. No problem competing there. A moat is difficult to find new competitors. I mean, some numbers I saw. If someone wanted to bring online a service like this, be about a $10 billion loss over the first 3 to 4 years. So that's a pretty significant barrier to entry.
True.
E-commerce, which is where a lot of people know Amazon for. In fact, I'm getting 2 packages delivered a little bit later on today. My phone's kind of beeping with those all the time. The logistics, the infrastructure they put in place is unrivaled in that space. I kind of noted here, I think they have a great reputation. Like, to me, they do. They're easy to use. They have delivery speed is on time. It's easy to return products. Now, people might argue that they have a good reputation, or depending on your personal circumstances, but I think that they are a phenomenal model, a business model. 60% of their unit sales today are third party. So a very, very attractive opportunity for growth there. Couple more points here. They do develop their own chips as well, and this is not really what they're known for, but they have been putting a lot of investments into chip making. And the AWS Graviton 3 is, I think, the latest iteration, lower cost, higher performance than their Intel, their AMD competitors, but the competition is in fact very, very fierce. Their collaborators, I think, because of who they are, like NVIDIA, AMD, they've just announced some collaborations with them when it comes to things like machine learning, artificial intelligence, which of course have increased need for speed. So there's a lot of opportunity in that space as well. I'll summarize here, so I'm going way over time. They have a huge lead on their competition in their e-commerce space. They do definitely play in a growing industry or industries, and they're a leader in innovation. They've certainly proven that. So I think if I had to buy a company today and hold it forever, maybe you pass it down to you someday, it would be Amazon.
Nice. Let's go. I'm rooting for Amazon then.
I said yeah.
I am as well a shareholder of Amazon. I really like that pick as well, Dad. It's very hard to argue with. Well, yeah, let me jump onto mine.
Sure.
My first pick, just in lieu of time, but similar category, a stock that often gets kind of categorized with them, and it's because it's another FANG stock, but it is Alphabet, Google. And I actually like the stock more so than Amazon, believe it or not, personally. Just a preference, but ticker here, GOOG, trading for $124. This is one, Dad, where I think the valuation is actually quite fair and possibly attractive. Amazon too, actually, at these levels. Not saying Amazon wasn't. In fact, Amazon's been on my radar to add at these levels. But I was just looking at Morningstar's valuation, and today they are trading at an 18% discount. So it might be right in line with the question that was asked. Good stock to buy now and hold for the future.
Yeah.
For many of the reasons that you said, I could almost echo it. The constant reinvestment, the constant innovation. I mean, the Google products, we could list them for days. Google Search, Google Maps, Cloud, like you said, one of the leaders, not quite as big in as AWS, but one of the big leaders. They've just proven successful venture after venture after venture, obviously with failures along the way. But what I think about a company like Google, which makes it so attractive, is they're sitting on $25 billion worth of cash on hand, right? And I mean, $25 billion, there's a lot of companies that have more cash than that, but that is no small chunk of change, and it just provides so much future proofing for whatever it is. And then you keep in mind these companies are attracting the highest, brightest minds in the world, the top talent. Again, this could be echoed for Amazon, it could be echoed for Google and Apple, but there is some degree of, at this type of scale and these type of deep pockets, it's just crazy to think about what they can do. And in our live chat, we talked about, Waymo. We kind of had some jokes about Waymo. Unfortunately, someone was saying they saw Waymo cars crashed on the side, this and that. Waymo's obviously
I think they said stalled on the side, not crashed necessarily.
Yeah. Well, we were doing a Tesla versus Waymo conversation, and point being was that although we don't hear about it in the news so much, they've been investing heavily and really improving their technology in the self-driving car space. And like I said, now owning a Tesla, I do think the future in cars is this autopilot feature. And how soon that will come, that's debatable. But this is an example of beyond just what we see and what we use on our computers every single day using the Google suite of products. I mean, they're obviously investing in all sorts of additional areas like this that 10 years from now, 20 years from now may just be the standard, right? I think it will take time, but clearly, Waymo has its benefits. AI you alluded to, obviously this is going to be massive for Google. I believe Bard is their AI service product, and that should just integrate so seamlessly with what they currently have. I think it'll improve all areas of their business. And like I said, in lieu of time, Google is my first pick. I do believe trading at a nice price today. It's one of my top positions and one that I would happily hold for the foreseeable future.
Nice, good pick. This is so interesting, Brandon, because we do our regular stock battles where we're touting our company over others. But I think I know you told me the next two you're going to talk.
Each other.
We're rooting for each other here because, the way that we invest, there's a lot of similarities here.
In all honesty, even in the stock battles, I'm low key rooting for you because I do like your picks. You do, but I can't show it.
Yes, because it's a battle. You're not allowed to. We can go for a beer after this taping is done, but during the taping, it's a battle. It's
a cage match.
Let me move on then to my second pick that I would buy. Again, I'm a shareholder and have been for many, many years, and I would continue to own this for the rest of my life. There's a lot of talk about going out and just buying an ETF and letting it ride, right? Well, you can buy an ETF-like investment if you buy shares of Berkshire Hathaway, and that's the company that I am going to talk about today. So the company, as it stands today, owns like around 50 or so different companies. Obviously, I mean, I spent my career in the industry, so you studied Warren Buffett. Whether you agreed with him or not, you still needed to keep up to date. Things like his rules, like great fundamental companies buy and hold for the long term, buy the biggest blue chip companies, take relatively large stakes rather in most of the companies that he has. As of today, the top 5 holdings in his portfolio, which say almost 15, I think there's maybe 46 companies today. 77% of the value of Berkshire is in those top 5 holdings. So you got Apple, Bank of America, American Express, you got Coca-Cola, and you got Chevron. So even though there's a lot of names there, it's fairly highly concentrated, and the top 10 makes up about 94% of the portfolio. Interestingly to me, so there was back in the day where Berkshire was very, very much more focused, I would say, but today with the company, you're getting exposure to finance big time, insurance, freight, technology, obviously with their large weighting in Apple. You got utilities, energy, manufacturing. And so it is diversified enough that if you are buying one holding to hold for the rest of your life, you could buy that. Brandon, you talked about cash. Today, the last reporting, Berkshire has $130 billion
That's
sitting there.
I was literally thinking, as I said, what was it? Google had 25 billion in cash, billion, excuse me. I'm thinking, yeah, Berkshire. I knew Berkshire was coming up next, and I thought, well, that's going to trump the amount of cash here. But
it is, and you know what? That's controversial because a lot of people say, I don't want you sitting there with that amount of cash, right? They don't pay a dividend.
Yeah.
But interestingly, on that note, of their top 10 holdings, I think 9 pay a dividend, right? So they have a good stream of income coming into the actual, the holding company, but they don't pay a dividend themselves. And so a lot of people are saying, they should pay a dividend or, just don't have so much cash sitting around. I understand that. Now, the impetus of the way Buffett has run this has always been focusing on the shareholder. And I hope you got, Brandon and I were down in Omaha a couple of months ago to go to the Berkshire AGM. And I hope you walked away with that feeling of how dedicated he and Charlie and the team is to the shareholder, right?
Yeah.
They're sort of the opposite of so many companies, which tend to focus more on themselves, but they many times he's confirmed that to me. They will buy back shares when the values are attractive, and again, for a lot of times they were criticized for having too stringent buyback criteria with 1.2% I think of book value. Anyway, they've loosened those in the last little while. The next chapter is the big wild card here with Berkshire, and obviously the leadership will change. In the next while. I mean, Warren's 92, Charlie's 99, so that they're not going to be there forever. But
I'll just say, when at the event, the next 2 managers coming up, those guys are lame. They're
boring, right?
Well, I forget the Indian fellow's name, but Ajit and I think Ted or Todd. And Greg, excuse me. Yeah, was those guys are just blah. Like I don't see it. Yeah, sorry, go on.
So they're lame in their personalities or in their management of the company?
Mainly personalities.
Yeah, I agree. They're no Warren, they're no Charlie. I don't think there ever will be again. Yeah. Importantly, though, with Ajit Jain you're talking about, and with Greg Abel, the successors, they to me, the culture of Berkshire has been ingrained into them. And they've been around for a long time now. And, Greg is the confirmed successor to Warren Buffett. Jane has been with them since 1986. And they have a couple of other investment managers as well who've been there for a long time. My first Berkshire conference was back in 2005. I went again in 2016, and then again earlier this year. To me, the message has not changed. It's the same message. And I wrote down a quick quote here that Buffett is known to say. He said, you should write down Oh, he says you should write your own obituary and then try to figure out how to live up to it. And, things like acknowledging his mistakes and what would you want people to say? In my opinion, this is not going to change. Even when they are gone, the next culture is going to be the same. So to wrap it up, I like a built-in portfolio of really, really good companies, corporate culture, second to none, in my opinion. And I believe that the wheels are in motion to continue. And so when that day comes where they either pull back or they pass away, I don't think the wheels are going to fall off. So I'm saying Berkshire is a really good stock to consider for your long-term lifetime holding.
So for the small price tag of $511,000, you can go out and buy yourself a share.
Yeah.
Is what you're telling the audience.
Yeah, I'm telling you that. Exactly. It's amazing, Brad. Just a quick aside, but the money that is down in Omaha during that week, I mean, the people that we met and spoke with just are bleeding money and wealth. It's an interesting experience, isn't it?
It is. I really enjoyed it. My pick, this one will definitely be more shorter and sweet because it's a good old, reliable, classic Toronto Dominion Bank TD, ticker TD.TO, 4.76% dividend today. And again, I guess I did pick some that I thought were attractive ads because I think this is a very fair ad. And we've covered TD a million times on the channel, so you don't need to know too much more than other. It's a top tier bank in the world. We in our live session just prior to this, we had a discussion on the housing market and the Canadian housing bubble, whether we're in a bubble or whether it's going to pop soon. And I've been seeing a lot of TikToks on, the collapse of the financial institution here in Canada. And these big banks are going to go under, the doom and gloom type story. And, one thing I would say about TD is they, not just TD, but the Canadian banks are heavily exposed to the mortgage space here in Canada. That is a massive part of their business. But TD as well, let's keep in mind, they still have, roughly half of their revenue coming from outside of Canada. Right, in the United States, their retail segment, their business is diversified beyond just lending out mortgages. They got the personal banking, insurance, investments, yada yada yada. And the one chart we pulled up was showing the housing prices in Canada versus the housing prices in U.S. and it was quite clear the divergence was more so on the Canadian market. And again, I'm thinking we always want to prepare for worst case scenario. And who knows what the world has in store. I'm not trying to say I believe this will or will not happen, but one thing about TD is you talk about companies that have been through tougher times before. One of the most fascinating stats is they've been paying dividends since 1857, right? How many years is that?
That's older than me, Brandon.
That's older than you, barely older than you, but yeah, that's they've been paying dividends and year after year just increasing them out. Over the past 5 years, they've increased to 7.5% compounded annual growth rate there. It's a history like that gives me comfort at night thinking, hey, if the bank like this collapse, there's a big problem here in Canada, but I would feel quite safe. I think this is I don't want to say no brainer, but a good solid ad. And I think a good ad at today's prices, trading for about $80 with a nearly 5% dividend.
This is so weird. Just being free to agree with everything you're saying. But yeah, I do really like TD Bank. Again, for literally decades now, I have been a shareholder of various amounts. At certain points, I've increased, I've decreased, but I've always
I plan to be for years and years and years. That's my plan at least.
Good. Okay, another good pick, Brandon. My third pick today. This is a company that I'm not sure if too many people are going to agree with this, but a company, and I'll try to explain the reasons why I think this company would be a good company to hold, is Johnson & Johnson. And, we think of Johnson & Johnson probably more so on the, consumer health products, the Band-Aids and the baby powder and that type of thing. That is the smallest part of their business. And recently, just like a month or so ago, they spun that off to a separate division. They still are a 91% shareholder of that. So I'm still including that as part of what they do here. But pharmaceuticals is the largest part. And, medical technology would be another part. So the largest part, say, is pharma. And I take no joy in saying this, but when we're looking at a company to hold, bad news, I'm going to say, is good news. And there's no question that the world is facing growing health issues, and there's a lot of reasons for it. Whether it's smoking, whether
vaccines,
it's drugs, vaccines, whether it's obesity. I kind of thought you might insert that into there. It is that's not changing, right? And we think of things like a couple of points I put down here. Our diets today are leading to increased diabetes situations. Well, they sell blood glucose monitoring systems. They sell insulin pumps, heart disease, medications to prevent it, medications to treat it, and even something like arthritis. I mean, they're pain medication. I would say whatever the reason for your health woes, J&J is there.
Solution. There's a solution.
There's a solution, or there's, in some cases, there's a possible prevention as well. Medical technology, medtech, they call it. This is their second largest contributor to their earnings. This is an area that people really don't pay that much attention to unless you've been in for surgery. But surgery is the largest subsector of this component of their building. That's growing as well. Orthopedics, again, growing demand as the population. I think a video or two ago, Brandon, you showed like the population pyramid, how it used to be, heavier at the bottom and narrow at the top, and now it's almost like a column, right, with a lot more percentage of the population aging. So that will, again, contribute to growing demand for the company here. And then consumer health, which is the third largest segment. This is what they've just spun off to a Kenvue. Kenvue is the name that they gave to the new company. The Band-Aids, the Benadryls, Tylenols, etc. Like I say, they own 92% roughly of the shares there. Stability, something that you want to look for long term. They still today have the rare AAA rating for a stock. I mean, there's not many that have that out there. They've been paying a dividend for 61 years, so that qualifies them as a dividend king. Without the big wild card with J&J right now is the claims. There's tens of thousands of claims on their talcum powder asbestos related claims. They have a proposed settlement out there right now for about $9 billion. This is a significant issue, but I see it truly as a short-term hit. I think in 10 years, we'll be looking back and talking about this if the lawsuit's over, but then maybe 20 years, we'll be looking back and saying, oh, that was a hiccup that they hit, a significant hiccup, but I don't see that. I see them getting past it, let's put it that way, and going on for the other reasons I've spoken about here to be a good long-term hold. They've got a long history of success, as we've talked about, a proven track record of going through ups and downs in the market, and they're in the right space. Like I say, I take no joy in saying that, but they're in a very strong demand and growing market. So I think J&J is a company that you might want to have on your radar as well if you needed to buy something to hold for the rest of your life. And hopefully it's a long life.
I like that. Hopefully you use their products as you get older. And that's a solid pick, Dad. Well, hey, let me finish off with my last pick because I do have a call coming up after this. So I'm on a bit of a time crunch. But very different than your J&J pick, which I would consider secure and safe and easy going. My third pick is the company Tesla, ticker TSLA. This is by far and wide the highest risk, I would say, of my selection, and possibly a shock to our subscribers because, like you said, you did a video a couple years ago. I did a video on Tesla saying I wouldn't buy it, and it was at these more inflated levels. And I believe, if you look back, that was probably the right call at the moment, or at least over the short term. Who knows where the stock will go in the future? Yeah. But I think I have turned the corner on a Tesla. And like I said, this one is the one outlier in my presentation today, where the valuation I'm not loving at the moment, and we see today trading at an $800 billion market cap, and it's been up 113% year to over the past 6 months.
Something like that.
I mean, you can just see from this chart, it has just spiked, and it'd be funny if we were making this conversation 6 months ago. That's quite a different story. We're looking at their market cap and their opportunity, and why I say that is this is a stock that is actually high on my radar now that I've got a Tesla, and I've what do you say? Drink the Kool-Aid, right? You drink the Kool-Aid. I'm drinking the Kool-Aid. So I understand why people are loving this. I understand why this was the top selling car last quarter in the world. The Model Y, that is, of course. Yeah. And I do want to get into the stock. I'm just saying maybe not at this instance. I know that's kind of counterintuitive to what we're saying. If we're going to buy a stock that's going to be hopefully successful over the next number of decades, sure, maybe at today's level is fine. I would like to see a better entry price personally for me, and you guys can make that own decision for yourself. But if they are able to execute on what they are planning, I think it could be worth the risk if you have this risk profile and it's managed your portfolio. Obviously, the more recent news just this week was Rivian joining the Tesla standard, or the charging, making Tesla the charging standard that joins the likes of GM and Ford, which you've covered previously. I'm even hearing leaks about Hyundai EVs using this standard, and that is just so beneficial for the entire space and the entire movement. And they've been building their superchargers out for years, and it's kind of coming to fruition. This, they invested all this money in infrastructure and whatnot. And Tesla often gets, the big debate always is this a car company? Is this a tech company? And they get, looked up with the other legacy car makers, and I think that there is more to this company than just a car company. I lean that way. If I had to, there's this thing and I say, well, is it a car company or is it this? I actually lean more towards a tech company, and I draw comparables to Apple in some ways where they're just innovating an entire industry, especially when it comes to this full self-driving feature where you can unlock the ability to, when you're at work, have your car go out and shuttle Ubers or go drive people around. And that just becomes an entire new revenue stream. I believe the rumors are that there would be a revenue split where Tesla makes money, so the stock is profiting. You make money, right? You're a Tesla, when can you buy a car, Dad? And cars is depreciating asset. I'm gonna go pay $40,000 for a Civic. It's gonna sit there in my driveway and get dirty, and dogs are going to do all this stuff. Well, dogs don't pee on cars, but you know what I'm saying? It's a depreciating asset. Now you're converting something like that into some sort of productive asset for you where it can be earning you passive income. It can be going out. And obviously, we're still in the very early stages of full self-driving. But I mean, I use that feature when I'm driving to work. I tick it on and I just cruise, and it turns corners for you. It does all this. It's exciting to see where the next 5-10 years will be. And maybe longer, but the future will be. And again, just seeing these, the Rivians, the GM, these partnerships, it's leaning more and more towards being Tesla's like, hey, they have clearly established themselves. A couple years ago, far more uncertain, and who knew, and they weren't profitable. Well, they have, in my opinion, turned a corner. And maybe you don't get as much of a reward for being not jumping in early enough, but even at this level, if they're able to execute on what they intend to do, hey, they do a software update and they can affect millions of cars. I do see it more as a tech company, really. And like I said, valuation wise, I'm hoping that we see a little pullback here. I know Tesla shares have been down the past 2 days, I think down 5 or 7%, just on my watch list I've been noticing. I'd love to see that come down further because, yeah, the entry point I think does matter. Again, 6 months ago, you could have got this for half the price, right? Nevertheless, this is one that I think is, for the people with the risk appetite, a fun one to throw on the radar. And more importantly, if this cage match happens between Elon and Mark Zuckerberg, I think if Elon takes him down, I think that's an indication to buy the stock. And if it's going to spike, it's going to explode. And if Zuckerberg, with all his training in jiu-jitsu, manages to work it out, maybe we short Tesla. And I rethink my. One more final note I have in my notes here. I do think it is a positive that Elon has announced that he's stepping down at Twitter. I think over the past year, this whole Twitter debacle has just it has to take on your mental load, and it has to take your attention elsewhere. And don't get me wrong, he's still so involved in Twitter, and I think even though he's technically stepping down as CEO, it's not like he's going to be taking a back seat. He's always got a million projects on the go, but I would say that is a positive. There's, you're working on Twitter or you're stepping down slightly, more attention to Tesla. It seems like this is his baby along with SpaceX, and for those reasons, I do think this is worth a consideration for a long-term stock to hold.
Yeah, good point, Sir Brandon. And probably, if you're a regular viewer of our channel, it might shock you to hear me say that I do see the potential there. And I think on our channel, I've got this, I think, undeserved record of not liking Tesla. And I don't not like Tesla. I just kind of, I've done a couple of videos on the valuation of it and saying, for most people, it's too much risk and that type of thing. But from a long-term innovative perspective, man, they remind me a lot of like the Amazons of the world, where they create a new space. And they're the leaders. So that first out, will have benefit to them. I think that is still obviously lots of competition. And you said there's a higher level of risk. Now, probably 5 years ago, I would have said there's a ton of risk to make sure they get even to here. Mm-hmm. I have no doubt now that they will continue to operate. Yeah,
I think they've
got over that big hurdle.
I think they've turned the hump. Yeah, they got over the hump. They turned the corner. Mm-hmm. I think that does provide a lot more certainty. And like I said, you miss out on some reward there. Some people that are willing to take the risk 3, 4, or 5 years ago, they've been exceptionally rewarded. And for others, maybe they want to see a couple things get checked off before they do. And that's the whole part of investing, right? Is you find when it makes sense for you. And it's not just you. People say I hate Tesla stock too. They think I hate Teslas as well. And I can see that. I mean, it's like, I do feel a little bit like guilty. It's like, oh, you get the car and then you look at the stock. I do that all the time. It's just natural. Like when I start using a product, whatever the company is, I'm always more incentivized to buy the stock. That's just, I can't lie to you. But what I did, you can go back and watch our old videos. We both always say, cool product, love the company, love the innovation, the idea. It's just the share price had gotten too far ahead. So it was the share price that we were more worried about, the valuation. And even like I said today, it's $800 billion. I'd love to see that come down. But the business fundamentals, I believe, have shown the right, they're moving in the right direction.
Yeah, I think if we use the term turn the corner, or like you said, get over the hump, I think that's probably the best way to describe it. So we'll see over the next 10, 20, or 30 years how that plays out. But I'm much more bullish on them than I ever have been before, just with all the recent developments. So we appreciate the comments. I wish we could do a video on every request, every comment, every suggestion, but we just can't. But yeah, throw them in there and we'll see what else we can come up with, because it's always nice to have new, fresh ideas to create.
Absolutely. And if you guys enjoy this video, please give it a thumbs up. That's a great way of supporting the channel. I think it boosts it out more. So if you learned some, if you like the stocks, or if you want to share some down below, give a thumbs up and leave your comment down below. Of course, in wrapping up, if you are in the market for courses and training, we offer training to Canadians through our Investing Academy. There's a link down below along with those other 3 events that will be there for you to get your tickets. But yeah, we offer course and training for people who want to do DIY investing. You want to get into maybe stocks, maybe ETFs, whatever the case is. If you want to learn more about investing and you're starting out, click the link, speak with our team. We'd be happy to chat with you. That is that first link down below. But any finishing thoughts?
No. Well, the only finishing thought I have is I wish that we could do the top 10 that we might want to buy and hold forever. Because like I say, going through this exercise, Brandon, there's a lot of really, really good companies out there. So and if you have a stock that you, not you, Brandon, but you, the audience, if you have a stock that you think should be on the list, let us know. And who knows, we might do a sequel at some point.
If you want a part 2, you let us know down below. But we'll take a look at the comments. And thank you guys for watching. I hope you enjoyed. I'll see you in the next video.